Hey everyone, how's it going out there? Hope everyone's having a good day so far. Just gonna fire off this discussion about really what I'm seeing in the markets. Gonna talk a little bit more about some of the technicals, some of the other drivers that are going on. Of course, you can check this out on YouTube. You can check this out on Twitter and otherwise. And just give me a moment. I'm just getting everything all set up here. So, alrighty. So this is a segment I'm going to call Back to the Futures with me, Markets and Mayhem. And we're going to talk about a couple of different markets here, the S&P, the NASDAQ, the Russell, oil, gold, bonds, and the dollar. And just kind of going to go through all these and talk about what I'm seeing and what I think we're setting up for as we navigate the week ahead. Of course, I hope everyone's having a good trading day so far. Give me a moment. I'm just popping this out there. All right. So let's kick it off. First, let's talk a little bit about me. My real trading journey began in 2005, funding my own account and trading stocks, then moving on to options, futures, and forex. I navigated through the great financial crisis, which helped me to better appreciate the importance of understanding intermarket dynamics, momentum, and macro, and particularly how they all potentially can interact. I think that's a really important part of appreciating, uh, really, you know, staying power in the markets. And so my approach is systematic. I backtest, I build models, I trade off of a system. I do not just trade, looking at a chart and winging it. I really try to be very thorough. And that helps me to be more consistent. It helps me to be more disciplined. It helps me to not take some of the trades that I don't believe have a lot of potential. And then it also helps me to stay in the trades that I feel could actually do better. So it's kind of a win-win to have that systematic approach. And I began working in Bookmap, working with Bookmap in early 2022 because I really saw great value in the way their platform, including the heat map, icebergs, and stops work. I found this to be really a game changer for me in multiple time frames as well. So we'll talk a little bit more about that, but there'll be some cool information about how I use Bookmap, as well as some discounts so you can take advantage of if you're interested in checking it out. And then after I really learned Bookmap, I found there was one piece that I felt if I added into it could actually jumpstart my trading journey even more. And that piece was the idea of having options visualized right inside Bookmap as well, right? Because if I could see how options were moving the market, that could give me an edge. So let's go through the disclaimer real quick. I know this is everyone's favorite part of the presentation. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So just wanted to put that all out there so you all know, so we're all on the same page. Now let's take a look at the NASDAQ McClellan oscillator here. I have that on screen. What am I looking at? I'm looking at breadth and momentum, and I'm seeing it not really show anything too impressive here. We're just near all-time highs, and yet you wouldn't really know it looking at this chart. You're really not seeing that thrust that I'd like to see. We really do want to see a broadening out to show that a market that's making all-time highs has staying power. So, of yet, we're not seeing it. Doesn't mean it won't happen, but I would like to see it happen sooner than later because I think some risks are beginning to develop on the other side of this. Now, let's talk about skew. Skew is a measure of looking at how well hedged the market is through the lens of put premium versus call premium on the S&P 500 index. Why does that matter? Because that's the biggest hedging vehicle that exists. And since the 1987 crash, skew has always tilted more towards puts and calls as value at risk calculations have changed and become more rigorous. Now, why is this important to us as traders? Because when skew isn't as high, but positioning is pretty stretched, and we can see that in single stock options. We can see that in futures positioning. It tells us we're not in a particularly well-hedged market. And this matters also as we get closer to starting March and that resuming of flows that help to bid up the market. If we don't have that much skew, then those flows can be somewhat subdued, right? So that means you don't have the same level of that passive implied bid kind of pushing things higher. So I think that's important to take into consideration as we're approaching the market today. We're not quite yet in that point where those flows are back, but as we get into the later part of this week, they will be. And this is going to be happening around the same time we get GDP and PCE and other data. Now, hedge funds are extremely leveraged on the growth side. That means the long and short side of their book are very, very extended in terms of their exposure. In fact, it's 290%, which is the highest it's ever been. Now, what does that mean? It means that some of the single stocks and macro products they're crowded into can see squeezes, particularly on days when their longs are being punished. Right? So, hedge funds have been piling into some of these single stock shorts. Mara has been a good example of that, and the kind of squeezes it sees as a result have a lot to do with hedge funds covering as momentum traders buy in, kind of squeeze these hedge funds out. On the other side, it means they're very crowded into their long Mag 5 or Mag 7 trade. Right? So as you see, say, for example, a NASDAQ down day, you may have a bid in the Russell, or you may have a bid in biotech or non-profitable growth, because those are areas where the hedge funds tend to be pretty short. So you can have these days where there's these divergences that don't necessarily seem like they make a lot of sense on the surface. When you dive in further, you can actually see that there is more substance to it, right? And that's why I like to look at this, because when you see hedge fund leverage this high, it is important. It does have an impact on price discovery dynamics, particularly in those more crowded trades. Now, let's take a look at the NASDAQ composite versus 10-year note futures. They typically enjoy a rather strong positive correlation. That is to say, the NASDAQ moves in the inverse of 10-year rates and with 10-year note prices. We do have a 7-year note auction coming up today just after 1 p.m., so that'll be really interesting to watch. But I think that this chart illustrates that there is some growing risk that interest rates could present to NASDAQ stocks here, and we do have some events this week that could move rates. Now, just as a bit of foreshadowing, this came out from Bloomberg recently that strong labor market basically the labor market not really showing any signs of slowing down. That's allowing the Fed to be more patient here. So we have both non-farm payrolls re-accelerating, and I know they've been revised lower, month after month, but they're still re-accelerating. Last reading was 353,000, and the last average hourly earnings gain month over month was 0.6%. Now, when you annualize that, that does create a pretty big kerfuffle for the Fed, because that would annualize to about 7.2%. Now, we'll have to see how our average hourly earnings manifest from here, but this has been one of the big reasons that prices and services have remained resilient and in many cases continue to rise, like in transportation and shelter and travel and leisure. And the Fed's preferred inflation gauge, PCE, we'll get that information later this week. It is expected to re-accelerate, and that again does create a bit of a concern, because that re-acceleration could give the Fed pause about the plans to try to hike, and when those plans may happen, to cut, and when those plans may happen and how much they may cut. Hiking's on my mind because there's a lot of things we're seeing that actually could portend to a potential hike at some point if things change on the inflation front. You've got the market near all-time highs, as well as many housing prices. You've got crypto running. Not a lot of signs that are saying, hey, it's time to cut right away. And also, we've got financial conditions easier now than they were before the Fed first started hiking. So in many ways, you could say really the Fed's hikes haven't had a lot of influence on the market. Now let's look at tech stock valuations, rather extended here, coming off of their highs, but still, this is an area to concern ourselves with should interest rates go lower, right? All these intermarket dynamics, they do relate to each other, and rates on the long end going higher changes how we value stocks. So it is something to pay attention to, and I do have some charts we'll talk about with that specifically. But first, let's talk about what hedge funds are doing on the other side. They're dumping tech stocks as folks like us, retail, are buying the same. That's not really what we want to see. I think that we are starting to see a larger exit from institutions in some of the more crowded trades. So it's something to be just a little bit weary of, because if we do have a move down, that's going to start to catch up and you could start to see a greater exit from those same popular stocks. Now, this is an alarming chart. I share it because it's something that has been talked about a lot, but now we're reaching a new extreme. U.S. market breadth is the weakest since 2009, and that is the S&P 5000 market cap relative to the equal weight index. Okay, so what that's telling you is equal weight's just not performing the same way as market cap weight. And you can shake this up a number of different ways. You can look at the Mag 7 versus the equal weights or versus the market cap weight S&P. You can obviously use this ratio chart or others. And you can use other measures of breadth, like the number of stocks above their 200-day or 50 or 20-day moving average. All these are showing us that there's still a lack of participation. But here's a really easy way of showing it. Here's the market heat map across all the U.S. listed equities. This is from FinViz. Their site's pretty cool. You can check it out. They've got a lot of different tools on it. And this is showing us that this really hasn't been a market of equal participation. There's been a lot of parts of the market that just haven't participated. This is year to date. So you can see that and how that could be a concern when the market's hitting all-time highs, and yet there's a whole bunch of stocks that aren't really following along, including one of the former leaders, Apple. Now let's look at options positioning as we head into the trading day. We've got an implied open of a gain of about 1/12 of 1% here from the S&P. It's looking like implied up about 6 handles here. So that puts us just a little higher than spot was on this chart when I made it. But basically what this is showing us is we do have some significant positioning here at 5,100, at 50/50, and of course at 5,000. These are key levels. So if the market pulls back a bit, I think 50/50 could be a reasonable area of support. 5,000 is a huge area of potential support. On the other side of that, 5,100 could provide some resistance. Now, what we would want to see to say that resistance may not be such a factor is positioning continuing to roll up. That would be seeing more and more interest at calls at 5,200, 5,250, and so forth. We're not seeing that quite yet, so I do believe 5,100 is a key level to watch on the upside. And of course, 5,000 on the downside, really, really big area of potential support. These are SPX levels. You can adjust them over to ES. I think the delta is about 14 points right now. Speaking of ES, here's my latest chart looking at the technicals on ES. And we can see here we're just below a pretty important area of resistance, that 50.93. We haven't really been able to hold above that area for more than, let's say, basically the last couple trading days. We've challenged that area. We've fallen back. We did have one day where we held above it. I think looking at how we hold 50/50 today, in particular on ES, is going to be really important. And remember, that's going to be above that 50/50 level on SPX, right? Because we do have a delta between the two contracts. But nevertheless, I think if we can break above 50.9375, we've got room to the upside. That's going to probably take us top to the value area, which would be around 51.20. So right now, path of least resistance remains higher in the intermediate term. But in the short term, we could consolidate these gains a little bit and possibly retrace. I think it's going to be all about interest rates and the dollar in terms of how the S&P trades today. And remember, once again, we do have that 7-year auction coming in just after 1 p.m. So I think that'll be pretty important to take into consideration as well. Next, we have the NASDAQ 100 futures contract for March. We can see once again resistance overhead at 18,044.25 levels, what I've marked off. I think that's a really key area. If we can break above it, I don't see any reason this index can't try to make an all-time high. But for right now, we're sort of consolidating between there. and 17,928.50. I think we slip below 17,928.50. We've got 17,731.50, and then we've got the point of control, which is just below that, and then finally 17,484. Those are those key areas of support I'd be watching. But again, for the NASDAQ, path of least resistance in the intermediate term, likely higher, right? But as we're going into today, we are kind of in a market that's in more of a resting state. It's more going sideways over the last 3 days, and we need to break out of this range, up or down, to get a sense of direction. The Russell looks interesting here. The Russell's actually looking stronger overall than the S&P and the NASDAQ with how it's behaving. Some of this is going to be short covering from those crowded hedge funds that really love shorting the Russell. It feels like they really want to short the Russell to zero as much as they possibly can. But on the other side of it, there is appetite for small caps, and we have seen that appetite growing as the year has gone on. So we'll be watching the Russell today, that 2047.90 level, that next area of resistance we want to see it climb above, and then 2069.40 becomes a pretty logical area of potential extension. Next up, we've got crude oil. Crude oil, when I was making this chart, is trading at 77.40. I'm right now looking at 76.41 as my bullish pivot, so above that level, and I'm inclined to take long trades, but I do want to see this break above 77.84, so we get a chance at 78.91. I do think from here, however, the chances are that oil gets to about 85, 86 are pretty strong over the next month or two. Then we've got gold, everyone's favorite shiny thing. Gold is looking like it's still stuck in a state of consolidation, but it is trying to make a push. Part of that push is longer end yields are starting to sort of flatten out after their recent rise, and the dollar's making a bit of a stair-step pattern lower. So gold could have a bit of room here. I still think gold's got to prove itself, though, so I'm looking for gold to push above 2049.20, and then I think we have a chance at 2071.50. Above there, we have a chance at 2100. Next, we have the 2-year note futures, which look like they're ready to continue moving lower. If you recall last week, I showed this chart saying we're really looking for that 101.28 level to crack. It did. So I could see the 2-year note futures continuing to grind lower, meaning 2-year yields move higher. This is a repricing of the Fed and their resolve. The market still thinks they're going to cut more likely, more times, and more aggressively in terms of timing than they are. I think that it's most likely we get maybe 1 or 2 Fed cuts this year, at most 3, and they probably start in July. So this contract could have room lower on the basis of readjusting to the reality of the Fed versus what the market was initially pricing in, which was as much as 6 cuts earlier this year. Here we've got the 10-year note futures. This is basing. This one's looking a little bit more constructive. We might have seen the downside complete in this one. We're kind of basing around 109.16, and it's been something of an area where the market's found interest in buying. It's also going into a lower volume node. Every time we see that sort of look below, there's demand that comes back in. We get pulled back into this higher volume node. That's not a coincidence. The market's interested in transacting here, and as long as it is, this is a contract that's in that auction state of not really seeing excess in demand or supply, just consolidating, building up some potential energy for a bigger move later, and we'll have to see what that looks like. Maybe PCE or GDP this week will give us a little bit more of a clue. Then we finally have the US dollar index here, which you can see is making that stair-step pattern lower. 103.64 is going to be a pretty important level. I think if we break below that, we get 103.40, and then we get pulled into that big volume node below. So we're sort of in a decision zone right now. If we do get pulled into that big volume node below, you can see what happened last time. That was something that the market traded. We kind of got stuck there, right? So it wouldn't be too surprising if we do get pulled lower into this volume node here, that the dollar sort of consolidates between 103 and 103.40 for a while. That would not be a terribly surprising outcome. So we're going to get right into Bookmap, but before we do, I'm just going to talk about some of my work that you can follow. Obviously, you can follow me on Twitter and on YouTube. My handle on both is Mayhem4Markets. That's Mayhem number 4 Markets. My short-term trading ideas, coaching, and tools can be found at Traderade.com. You can get 20% off of your first month or quarter with the code Mayhem20 at checkout. It's a limited time offer. And my new advanced SPX options visualizer is available on the Bookmap Marketplace. You can check that out by visiting Traderade.com/ SPX. Also, you can get up to 40% off of Bookmap, by visiting Traderade.com/bookmap. That's Traderade.com/bookmap. Scroll down to the specials and you can see those discounts. My long-term trading and investing ideas, research, and consulting of the services are available at macrovisor.com. And set your calendars. I stream regularly, including for Bookmap, every Tuesday at 9 a.m. So be sure to join me here. And without further ado, we're going to dive right into Bookmap as we get ready for the market to open. So let me just take a moment to adjust my charts here. I've got a little bit of everything on screen. NASDAQ, Russell, gold, crude, of course, S&P, and then the treasury contracts for the 2s, the 10s, the 30s, and the euro and the yen. So we'll be covering all of that this morning and more. And I'm going to take a brief pause here. If anyone has any questions about anything that I've talked about, please feel free to ask at this time. All right. So we're going to dive right in. So we can see on the screen here, this is the Bookmap contract for S&P 500 E-mini futures in March, right? We're looking at that. That's the most liquid contract. We'll continue to look at that contract until it's time to roll, which I typically roll the contract the week of expiration, both for my own Bookmap and also for how I encode the SPX options visualizer. And I'm really keying off of where volume is, right? So when volume starts to trade the most at a certain contract, that's when I move to that contract. That helps me with execution. It helps me to follow where the liquidity is. And of course, Bookmap gives us a really good view of that liquidity. So it's important to be able to see what is happening in the market, where bigger players are expressing their interest in transacting, right? So on screen, we can see the wall of calls above us here. This is going to adjust to about 51.10. Okay, so I think the delta is actually about 10 points here. Let me just take a moment to look at that. Yeah, that rounded delta that I have calculated every night between ES and SPX is 10.5 points. All right, so for you all that are keeping track at home, the delta there is 10.5 points. All right, so that means the call wall puts us at 5100 SPX or 511050 ES. So you can mark that down if you're keeping track at home. We've got this gamma 1 level. This is the largest area of gross gamma positioning near spot. And this is going to be about 5050 SPX or 506050 ES, right? So those are pretty key levels. We also have from yesterday all the most active flows that were happening inside the market, right? So these were the most active calls, the most active puts. We saw that the most active put contract actually was quite active. This was the first time in a while I've seen it be the most active contract at 103,000 versus the most active call at 74,000. So quite a contrast there. All right, let's take a look at our more volatile friend, the NASDAQ. Pre-open, we do have a little bit of interest building above here, not as much below. So, you have some participants looking for higher price on their offers. See a little bit of that in the S&P as well. You see a decent amount of interest above, but there is some below here, particularly around yesterday's area of options interest in SPX. Russell's a bit more of a mess here, not as much liquidity in this contract overall, trading about 5.6 thousand order book depth this morning. And we can see it just trading below the point of control in VWAP here. Gold trading at 2045. There is a decent amount of liquidity in this contract today. Got 111 at about, looks like 2043.75. and then 101 at 2048.50. So that's pretty big. This is not a very liquid contract. So when you see that amount of interest in gold, I do think it's important. And we have crude oil here. Crude oil is trading above its point of control. And see how important that is today? Wow, look, I mentioned it. It just starts trading right at it and even testing below it. But seriously, you can see how important this level has been for the contract. As buyers pulled it up, it was continually tested and tested and tested. So far, it's held. Having mentioned it, maybe I cursed that. We'll see. Rates moving a little higher pre-market on the 2s and the 10s ahead of that 7-year auction. 30s seeing a somewhat similar look as well. And then as we look at the euro here, a bit of dollar strength this morning, just over the last 20 minutes or so, and a somewhat similar look in the yen, suggesting the same. So we'll go back to the S&P. We'll zoom in a little bit more here on the microstructure, just a little bit of a bid above VWAP and the point of control here into some of this resting liquidity above, as we're about 1 minute away from the opening bell. I'm sorry, 10 seconds away from the opening bell. And there's that opening bell for you, coming in right about now. And as it does, you can see liquidity really start to grow. Once cash trading takes off. It's also important to watch the liquidity. You can see liquidity really starts to thicken up here. So you can see that the difference between the pre-market and the cash session is the heat map gets a lot more interesting, a lot more participation during the cash session. You can see it in the Russell, you can see it in the S&P, you can see it in the NASDAQ, right? And that's telling you there's more folks that are interested in transacting. There's more activity happening. That also means you're more likely to get better fills in this market, during regular trading hours than pre-market. And seeing just a little bit of a pull here as we start off the cash trading session. We do see some interest growing below in S&P, plenty above as well, though. And we see price just getting right back here to the VWAP and point of control, right where we saw the second most active put contract yesterday. So we see there's a continued amount of interest really at this level. And within about 10 minutes or so, we'll start getting the updated flows from CBOE on the SPX options visualizer populating. Let's take a look at the NASDAQ. The NASDAQ's looking a bit nastier than the S&P here overall. It's not really what you want to see. The NASDAQ tends to be the momentum leader. So when it's not behaving well, it is something to look out for. And we see a big pop right there. A lot of volatility so far this morning. decent amount of volume on that pop too. You can see that by the size of these circles here. That's one of the things that's kind of neat about Bookmap is you can see it right on screen, that price action demonstrating how much volume is involved with each move. Let's take a look at the Russell. Russell reversing. Russell's kind of doing the inverse of the NASDAQ. The NASDAQ was down, the Russell was popping, the NASDAQ's coming up, Russell's dropping. It's interesting to see that. It does kind of illustrate that idea that there's that dichotomy and some of that, changing and hedging patterns. You see a little bit of selling coming back in the NASDAQ. Not as much conviction. You can see the smaller bubbles here. We'll zoom in on the microstructure. It's kind of interesting to do this. You can zoom in at, really any time interval and really to the depth that you want so that if you're a higher frequency scalper, you've got that opportunity to really look at just how things are trading at a much shorter frequency. Like right now, we've just got about 5 minutes of tape on screen. Hey, Steven, how's it going? I'm going to go back to S&P here. We see it pulling a bit down here, and we do see interest growing in bids below. We also see cumulative volume delta falling into the red for the first time this trading session. Let's see how much more interest. We do see some more interest growing at lower prices as well. So I think this is all pretty important to take into consideration. Now, I like to trade the 20-minute opening range, so we still got about 15 minutes left before we see how that forms. But initial indications so far look like we do have some weakness, maybe some continuation of yesterday's selling in the tape so far today. Let's take a look at the NASDAQ, and we're going to just zoom this out just a little bit here. And we can see it's getting a pull, and there is some more volume building that pull as the bubbles start to get a bit bigger. Well, yeah, we'll take a look at this. Let's see if there's any interesting options activity that I should be aware of. Got some big buys in Tesla and coin. Tesla got the 207.50s, about 128,000 trading for next Friday's expiration. Coin, we've got the 210s, 150,000 trading for this Friday's expiration, both on the call side. Nothing too unusual on the put side yet. And going into this morning, we had about a 270 million imbalance to the buy side. See S&P kind of continuing to pull here. We're going to zoom in just a little bit, focus on the cash session. A little bit of a continuation of that pull. New lows being made in the cash session here on the S&P. NASDAQ not quite as weak yet, but it may follow. It is looking pretty volatile. Let's take a look at the Russell. Russell's also starting to pull here too. So much for doing the opposite of the others. Gold continues to just sort of steadily build here. Crude coming off its lows, now pushing above that point of control level we were watching earlier. And rates just sort of basing here after moving a bit higher, looking at the 10s now, looking at the 30s now. And let's take a look. Euro building a little bit of strength after falling earlier. We watch the euro because it's about 70% of the US dollar index. It's quite a liquid contract, so it's worth watching closely. Let's go back. S&P making new lows here, getting back down here to that 50.78, 50.77 area where there is a large resting bid. And we see those resting bids building below us more and more. Now, we do get conference board consumer confidence at 10 a.m. I don't know that that's going to be a huge market mover, but I think it's at least important to watch. We can see a larger resting bid now coming in just below price. So again, this tends to act a bit like a magnet when trend is your friend. So this is important. This is the market, whether it's algos or trading desks, giving us a sense as to where they're interested in price. And it's at lower levels with these bids. And we just saw that resting bid now disappear. Was that a bit of a spoof? Interesting to look at these when they come and they go. We'll see if that one comes back. It seemed to have been triggered when price started to come down to 50.7750. Let's take a look at the NASDAQ here. Now it's actually starting to follow the S&P, so we're going the other way around today. NASDAQ is being led by the S&P, and the NASDAQ is now making new post-cash session lows. We've got SPX cash trading at 50.66, NASDAQ cash trading at 17,929. Both down less than 0.1% so far. Seeing more interest in those Tesla 20750s. Also, pretty decent sweep on SMCI 742.50 puts for next Friday with a trade value of 615,000 in premium. So someone either hedging out their SMCI or betting on lower prices, but that's a pretty big trade for that one. We also got some NVIDIA puts coming in, $200,000 paid for the 750s expiring this Friday. S&P continuing to make new lows here this morning. NASDAQ really pulling harder than the S&P lower now. Now, this could just be a healthy pullback. You know, we've had quite a run, and there's no reason that stocks shouldn't get a little bit of a consolidation or maybe a correction in time or price or both. We can see that positioning has become really extended. We do see some distribution happening from the institutional side and some of the more crowded areas of the market. So we'll see whether this leads to a rotation, consolidation, or some kind of correction. Let's take a look at the SPOOs here, or the S&P 500 E-mini futures. We can see VWAP getting drugged down just a little bit here. And we're just waiting for that options data to populate so we can see where some of those initial flows are today. I'll keep this a little wider as we wait for that to populate. We can also see a large resting bid at ES 50.50, 646 contracts on the bid. Interested in price just above that gamma flip level that our naive model has calculated. Some more Tesla calls coming through. 205s for 2 weeks from this Friday. 156,000 in premium paid. That Tesla 210 level overall also has a lot more interest growing based on our gamma profiling tool that we have on our Traderade Discord that I created that scrapes all the options on the chain. We can see sellers pulling down the point of control here now to about 50.77. We'll zoom out just a little bit more. Yeah, it's mostly that 50-50 order. That's really the biggest one on the book right now that I'm watching. Let's go over to the NASDAQ. NASDAQ continues to also plunge new lows here. Let's see if we see any interesting levels of resting liquidity below that are of similar size. Nothing like the S&P here, at least not yet. Yeah, there's 17,800. That's going to be the largest that you see, and that's about 1% lower than where we are now. So I guess it's somewhat similar to the S&P, albeit lower. Russell's pinging around the point of control that's been pushed lower by sellers here, now looking like it wants to push below it, potentially making a new low. There it goes. Let's take a look at crude here. Crude is building. Often is the case when crude runs higher, we see interest rates run higher too. Not so much yet, so we'll be watching that one. I like to watch the 10s with crude. Rates on the 10-year and crude oil tend to have a strong positive correlation. So that's one of those intermarket dynamics you can watch pretty closely, and that tends to have an impact on the dollar as well. We do see the dollar coming in, making a move higher. It's the inverse of what we're seeing on screen with the euro, right? So the euro is going down. That means 70% of the U.S. dollar index is going down, which suggests that in that same time period, the U.S. dollar was moving higher. And we see somewhat similar with the yen, albeit not as extended. Someone selling NVIDIA 790 calls, 123,000 in premium sold. That's for this Friday. And some more Tesla call buying, 205 strike, 131,000 a premium paid for this Friday. A lot of interest in Tesla calls this morning. That's pretty much the majority of the unusual flow I'm seeing on the call side. And I will be building an options visualizer for single stocks. I'm going to start off with SPY, but then, QQQ, and then I'll look at Tesla, NVIDIA, and all the other single stocks that folks like trading as well. And we do see Tesla shares bid up 2.75% to 204.88 today. So certainly that call buying is helping to drive prices a bit higher. And getting a little bit of a bid over the last 2 minutes here, but nothing to write home about. Just more stabilization, I would say, than anything else. Similar look in the Russell now trying to challenge the point of control from below here. And now we have these initial options levels populating from my SPX options visualizer. You can see that the most active put strike is actually above price right now. And then the second most active put strike is just above that really large level of resting liquidity. Now, these order flows will develop over the first hour or so. We'll get a better sense as to where there's a lot of interest, but these are at least the initial areas of interest that we're seeing. So we're going to zoom out a little bit more. We also see the midpoint coming on screen. The midpoint often aligns pretty closely with the point of control in VWAP, and the midpoint appears when there is a relative balance between the amount of interest in the top two puts and the top two calls. And now we see that most active put level lining up with the midpoint as well. So we'll just zoom in a little bit more. We do see interest in these higher prices. And we also see interest growing just below the point of control, 313 at 5076. And then you've got double stack here at 5073, probably up to 5073.75. Earlier today, we learned the U.S. house price index for December was up 6.6% year over year versus 6.7% prior. So home prices are still on the rise. Another reason that I don't think the Fed needs to look at cutting anytime too soon. In fact, Powell was the first Fed chair ever to identify housing as being in a bubble and saying that we should expect a reset. Now, whether or not that's still the case is a whole other story altogether, but it's at least something that's in the Fed's purview. And we haven't seen that. Prices have come down, rates remain very high. That's keeping a lot of the existing supply locked up, which is ironically keeping prices high, right? If there's not supply and there's still demand, prices are staying elevated. And that's because, if you got into a mortgage at 2.5%, 3.5%, why would you want to get into your next one at 6.5%? So we've got consumer confidence and Richmond Fed coming up at 10. This is going to be interesting. We have the 20-minute opening range here having formed. Let's call the top of the range 5087, the bottom of the range 5074. Now we're trying to get a sense as to if we're going to pierce either side of that range and potentially get some kind of trend day here. Not a very big opening range, right? But still enough to be worth watching. And also, we have the government shutdown deadline coming up this Friday for what that's worth. I don't think it's going to be a big deal. I don't think this government is going to shut down, but I think if it does, it would be minimally disruptive. I think a lot of the time, what a government shutdown actually is versus what people talk about are two totally different things, right? What it actually is a part of the government that's deemed non-essential shuts down temporarily. But what it's advertised as is like some kind of end of the world thing where it's going to have all these bad consequences on the economy and the markets. Often is the case, it doesn't have a major consequence. It's maybe a little bit of volatility, a little bit of stress, but the Pentagon's funded, all the essential agencies are funded. It's just like a temporary pause on spending in certain operations, and basically people don't get paid for a little bit, increases their financial stress, particularly in areas where there's a lot of federal government employees and contractors. But ultimately, you see creditors and landlords and others work with these same folks knowing they'll eventually be paid. So it's usually not a big issue. So I wouldn't make a lot of it. We'll see what happens by the end of this week. They'll probably get another continuing resolution. But we haven't had a 2024 budget for this government. I mean, the 2024 fiscal year started October 1st. It's almost March 1st. So it's been 5 months almost with no budget in fiscal year 2024. So great job. So let's zoom out a little bit. Let's see where some of these areas of interest are. We can see now things are shifting around a little bit. And look at that. This is very interesting. The most interest in puts is around the same level where there is the most interest in this 647 contract bid at 50-50. There are no coincidences. These are very much related. You often see this, which is one of the reasons I built this tool for Bookmap, because it's really neat to be able to see the heat map, where people are interested, where they've already transacted on various time frames, intraday, but also, full year volume profile is a good thing to zoom out and look at. But then also where there's interest in transacting options and where there's already positioning. So we can see today, and now this is the second most active put, there's a lot of interest around ES 50/50, which is going to be SPX around 50/40/50. And right now, because there's a relative balance between the most active puts and calls, you can see they're pretty much all 3,000 volume right now. We have that midpoint on screen, and that is converging closer with the VWAP level, kind of getting pulled into midpoint here. This midpoint is basically a magnet when the options flows are kind of balanced. And so I like to look at it as, if we see the market get extended above the midpoint, there's real buying happening outside of the options. There's share accumulation and futures accumulation. And on the other side, if we get well below the midpoint, we're seeing the opposite. We're seeing real distribution outside of what's implied by options. So it kind of gives you a sense as to where the drivers are. And if we get kind of pinned at midpoint, and in auction theory, it's telling you there's a relative balance between supply and demand in the external factors in shares and futures, not just options, right? Let's take a look at the NASDAQ. NASDAQ making a bit of a push here on some decent volume, but still below VWAP. Here we can see on the white line, and still below the point of control. We'll zoom this out just a little bit more. So we can see that 20-minute opening range, which we're also, we're really nowhere near piercing either side of it. So we're just going to keep that on screen with both of these. Keep that last, 20 minutes or really from the open on till 9:50. See if we move either way. That would be my key trend indicator intraday for today. Let's take a look at the Russell here. Russell's just pinging the point of control from below, just below VWAP as well. It's been a bit of a choppy trade today. Initially, it was trading to the inverse of the NASDAQ, but now it seems to be becoming a little bit more like it overall. Move on to gold. Gold is just chopping sideways here. Not a lot to see. We do have some of these larger areas of interest above and below, though. 2048.50 and 2040.50. I think these levels would be somewhat important. This is a thin contract, so it doesn't tend to get a lot of large resting bids and offers. These are large enough to get my attention. Then we've got crude, and look at that. Big resting offer in crude up here at 78.50. So with price moving in that direction, it does become more likely that that offer gets filled. We'll take a look at that later. Rates just kind of chopping sideways here overall after an initial move higher, getting a little relief in the 10s ahead of that auction at 1 p.m. Similar with the 30s. And euro coming down and basing, so implying the dollar moved a little bit higher over the last 20 minutes or so. And the yen, a similar look there. So we'll go back to the S&P futures. Right back at midpoint here. VWAP getting pulled closer and closer to midpoint, and really not a lot of activity. You can see it on screen. The bubbles are getting pretty small. It's telling you there's really not a lot of transacting. You can also see that in the volume below if you prefer looking at volume bars, but they're both telling you the same thing. Just not a lot of conviction in one way or the other right now. This is sort of a market imbalance. You got some Chinese equities having some interesting call flow. BABA 80s for next Friday, 125,000 premium paid for the calls on those. Baidu 120s for 2 weeks from now, 132,000 in premium there. And SoundHound stock bid up 30% today with their partnership with NVIDIA driving some interest in this company. Those 7.5 calls got a lot of attention earlier today. 162,000 in premium paid for them just after the open. Still have that large resting bid below us here in the S&P, which is now just by the gamma flip level. We actually have the put interest growing at even lower prices. Look at that. A lot of put interest at what would be, I believe, SPX 5000. So we'll keep an eye on that. We're going to zoom back in for now. I've got just about 2 minutes left on the stream for Bookmap. I hope everyone has enjoyed it. Of course, you can follow me on Twitter and YouTube at Mayhem for Markets. Check out Traderade, where we help you sharpen your trading edge. For a limited time, you get 20% off using the code Mayhem20 at checkout. If you'd like to get up to 40% off of Bookmap, you can do so by visiting traderade.com/bookmap. And scroll down to the specials. And if you're interested in the SPX options visualizer, check out traderade.com/SPX. It now works for Rhythmic and DX Feed. Got 10 seconds till we get consumer confidence from the conference board, so I'll hang out to cover that. We got 106.7 lower than forecast. Market's catching a bit of a bid on this reading. Forecast was for 115. S&P getting some decent excitement on that weaker than expected number. And one of the things you can see here, by the way, in S&P, look at how there's no liquidity here. You see how, like, before the event and as the event's playing out, there's almost none. And then as we go kind of past that event volatility catalyst, it'll start to come back. You can see it coming back now. This is why it's important to be careful trading events, because liquidity thins out and you may not get the kind of fills or price action you expect. So that initial pop kind of being worked off here, that initial pop not really happening on much volume either. We're still within that initial 20-minute opening range as well. We really haven't pierced either side. So we're going to be just watching how this thing trades for now. I'm not necessarily going to be taking any intraday positions because we haven't pierced the opening range to the upside or the downside. And this event volatility catalyst, CB consumer confidence, really hasn't provided the impetus, at least yet. We will see. We do have some resting liquidity above us. If we're able to get to that, that will show us there's an opening range pierce higher, just like we have some below us. So there is interest in either side of the opening range that could give us a better idea as to what kind of trend day today is going to take shape into. As we wrap up the Bookmap stream here, we can also see there's call interest just about at 5110. That's the SPX most aggressively bid call. And then the hot put is moved up here. This would be 50-60 on ES, so about 50-50 on SPX. So we'll be paying attention to all these levels today. We'll see how the market trades, but so far, no real compelling, interesting intraday trades based on what we're seeing. So I hope this has been useful to everyone. Really appreciate you all tuning in, and we will catch up soon.